All right. Good afternoon, everybody, or at least everybody on the East Coast. If you're on the West Coast, good afternoon. My name is William Mucker. I'm a client executive with Camaplan, and I want to thank everybody for joining today's webinar of what is venture capital and how to go beyond the public markets with Michael Block of Adit Ventures. Before we get started, and I introduce Michael, we're going to go over a brief disclosure because it wouldn't be a Camaplan webinar without the good old disclosure. So I just want to let everybody know here that at Camaplan, we're a neutral third-party administrator. We're not licensed to give any tax, legal, or investment advice. So if you need any assistance in one of those fields, please contact the necessary licensed professional in one of those fields. Feel free to bring them in. We're happy to be on a conference call with any of you, any of your tax professionals or financial professionals. We don't endorse anybody. Everything we do here on webinars or on our website is for educational purposes only. Always do your own diligence before investing any of your personal funds or retirement funds, of course. And this was just put together by a bunch of clever attorneys to let you know that we're not attorneys here or again, tax professionals. So here's my information. Again, I'm William Mucker. I'm a client executive with Camaplan. If you have any questions about self-directed IRAs or how anything talked about in today's webinar can be utilized in a self-directed IRA that you have currently or you're looking to open, feel free to reach out to me via one of these email addresses or the phone number. And we're also doing an offer where if any current clients want to open up additional accounts for family members or Roth IRAs for their children to help them get started, or if any new people interested in opening up self-directed IRAs are interested in doing so, feel free to email me and just let me know that you've been on this webinar today, and I'll be sure that we waive the $50 application fee for you and any of your friends or family. And without further ado, I'm going to introduce our special guest today. His name is Michael Block. He's a well-known authority and practitioner of macroeconomics. He has a diverse background in banking, hedge funds, macro, and markets, including private capital. Gave me a broad background, which I'm going to let him go over. And without further ado, if Michael, you want to introduce yourself to our audience, you're currently muted and you can unmute yourself and give us a little bit more information about yourself.
Great. Well, thanks, William. And, thanks everyone for joining us today. We're thrilled to be talking to you and through Camaplan about opportunities in the private markets and in venture capital for your self-directed plans. And, I want to thank you, William, for the great introduction. And, again, Adit has been around for about 6 years. The co-founders and their families have been investing in private deal flow and private markets and funds together for decades. And really, we bring together a very diverse group of experiences that adds up to over 120 years of experience in our senior management team to really employ what we think is a very strict and successful process in finding the right fund investments and the great private companies, the growth companies of tomorrow that are not accessible in the public markets, but that we can provide access to in the private markets. So again, thrilled to be here and to tell you more about that.
Of course. Thanks for joining us. It's a pleasure to have you. And clearly by your background here, you're not too shy from speaking in front of people with your experience on institutions like Fox Business, CNBC, Bloomberg TV, and all that good stuff. So I hope we at least hold up our end. You went over a little bit of information about Adit. Can you tell me a little bit more about your company and what it is that you guys actually do?
Sure. So Adit Ventures, again, been around for about 6 years, but we have a wealth of experience far beyond that among our principals and the history of investment here. We invest in private companies, and these are companies that you can't go onto your personal stock account and just press a button and trade. These are companies that you may have heard of or not, but what characterizes them is they're not listed on a public exchange yet. I'm talking about companies like SpaceX. You saw the big NASA launches earlier this year, and it stirred patriotism in your hearts and made you wonder about the marvels of human technology and what we can all accomplish together. That was SpaceX. That's the Elon Musk run company, founded and run company that is building this space technology. They're also building a satellite communications network called Starlink. That's one of the companies Adit is invested in. We're invested in a company like Airbnb, which, despite the COVID crisis and what that did to global travel, is thriving and doing well and heading towards a potential initial public offering as soon as by the end of this year. So what we do is we find companies like SpaceX, like Airbnb, and many others that we'll talk about today. And we offer our investors and our fund investors the opportunity to invest in these companies before they go public. The thing is, we think back in the history of the stock markets, and fact of the matter is, companies are taking a lot longer to go public. After the financial crisis of 2000 and the NASDAQ boom, there's been a lot of more scrutiny on public companies, and well, we support that. We don't want this to be the Wild West. But what is one side effect of that is companies stay private a lot longer. They stay in the private markets. They don't go public and subject themselves to over scrutiny, and they're able to grow much in the petri dish a lot more successfully. And that's backed up by data. Companies are just staying private longer. What Adit Ventures does is it allows access for you, the investor, to invest in companies like this before they go public, as enables you to capture more of the value that's being made in the private markets as opposed to public. And what I'll say about this is we do so employing a very strict process. We've developed a 10-step research process. It incorporates quantitative factors, things like revenues and revenue growth, profitability, margin growth. It encompasses qualitative factors like quality of management, the strengths, weaknesses, opportunities, and threats of the business model, the characteristics of the theme that the company's that the company works in. And we also employ what's known as ESG factors. And these are the factors that we think about in terms of, is this company good for the environment? Is this company good to all of its stakeholders, not just the private share owners like you and me through Adit, but also are they good to their employees? Do they have the right corporate culture? And then we think a lot about governance. I always like to say that if you get the governance wrong, you're going to get everything else wrong. You want a company that's fair to all of its stakeholders and isn't run like some sort of a dictatorship or malevolent dictatorship or tyranny. And that's what we shoot to go against. And with that, we've been very selective in how we invest in private companies. We've been around for 6 years, but we don't throw darts. We don't spitball at Adit. We run everything through our process, and over the years, we've invested in a total of 18 names, 18 companies over 6 years. That's not a lot of companies, because in that research process, we see hundreds of companies and opportunities every year, but we've only picked 18 over 6 years. And because of our research process, we've avoided running into some potholes in the road, is what I'll tell you. You probably have heard of a company like WeWork that was changing the way people worked and potentially lived. Well, we looked at that company. We didn't see a strong moat to keep competitors out. We saw a lot of leverage and over-aggressiveness being employed. And frankly, Adam Newman acted like a bit of a rock star, and we did not like the way he treated employees or counterparties or people he did business with. We were shown opportunities to own WeWork 9 times. In the private markets, and we turned it down 9 times, and we avoided that. We didn't invest in a company like Juul, which makes the smokeless tobacco vaping sticks, and was the subject of a huge investment of $13 billion at a huge valuation by Altria. And we didn't want to be involved in a company in that industry. And sure enough, because of a little bit of overhype and because of regulatory issues, that company has burned out, kind of like the mythical Icarus. Juul flew too close to the sun, the wax on its wings melted, and it crashed. We take great care for ourselves and our investors, and we are investors in our own funds to the tune of $5 to $6 million currently, to really avoid situations like that. That's really the added difference in how we offer you, the investor, whether it's in a self-directed plan like Camaplan and other venues, the opportunity to invest in well-curated private investment opportunities like this in venture capital. Tomorrow's exciting growth companies, you can own them now.
Wow, that's a lot of information, and I love to hear it. You love to hear it. You guys really seem like you know your stuff. And whenever I invest my money, it's always nice to hear that the list of due diligence steps that the company I'm investing takes is not shorter than my own. So you definitely go into different fields, which would make me feel a little bit safer. Now, I may have skipped over this. I just want to make sure I gave you enough chance. I know you have a very impressive and deep resume. I just want to make sure that if you have anything that you want to add to what we already spoke about yourself, that you have a chance to do it.
Sure, let's talk about the team. I'm here on the phone, so I'll talk about myself first. You mentioned some of this, but my history and my background, I've been very fortunate to have quite the fantastic journey through the financial services industry. I've worked in investment banking at a firm called DLJ, Donaldson, Lufkin, and Jenrette, which was one of the firms that really pioneered the concept of equity research, which we take for granted these days. They were a real pioneer in that field. They were acquired by Credit Suisse in 2000, which, right at the top of the market. So great trade by the founders of DLJ, in addition to being the fathers of Wall Street research. So I really came from sort of the traditional Wall Street world. After DLJ, I had a career in trading public securities at Citigroup, Solomon Smith Barney, which is important in this story because I met one of the co-founders of Adit in that job. But then I had a career working in hedge funds in various leadership positions in equities and strategy at funds like Sandell Asset Management and Magnetar Capital, which was founded by a former top guy at Citadel, which I think is a fund a lot of people have heard of. After that, I decided I liked talking to people and working with clients and consulting clients, institutional clients and individual clients, and working and writing on and talking about the markets and macroeconomics and just the big picture. I'm a real top-down guy, and what I ended up doing was I established myself as a macro and market strategist at various independent firms. And with that, I was able to really literally get inside people's heads by getting into their inboxes with a daily note that I put out on macro and markets. With that, I did, as you mentioned, William, I did a lot of work on television. I was, to this day, I'm known as an expert panelist on Fox Business and CNBC, CNN, Bloomberg. By the way, our co-founder Eric Munson will be on Bloomberg TV today at 5:50 p.m. talking about the Palantir IPO, which we'll talk about in a moment. But really, what ended up happening was I also went back to my investment banking roots, and in my role as a strategist and given the relationships that I had, I started getting involved in private equity and venture capital, helping companies raise money, but then also sourcing blocks of shares in the secondary markets. These are shares that companies aren't raising new capital, but either existing holders or insiders or company treasuries are selling out shares. Given my institutional relationships, I started working to connect buyers and sellers of these blocks, including funds like Adit. It was around that time that I met Eric Munson, who was one of the co-founders of Adit, and I was able to meet him because I knew the other co-founder of Adit, Dan McCooey, who, remember I mentioned, I get back to my history as a trader of public securities at Citigroup. Well, Dan and I were both NASDAQ market makers at Citigroup a while back. And he used to make markets in Intel, the well-known chip company, and I used to make markets in Yahoo, which I believe Verizon owns now, but it was a very hot NASDAQ stock back then. So he and I literally sat back to back. Like if I rolled back my chair like 6 inches, I'd hit him. And I usually did all day, standing up and down. So he loved that. I love when he hit me. But we sat back to back, trading more Intel and Yahoo than anyone else on Wall Street. That's how I met Dan, the co-founder. And I got to know the guys at Adit, and we worked on some things together. I joined their advisory board. And about a year ago, I realized there was a great opportunity to work with the founders and the great team at Adit to really help grow this great research-driven, process-driven firm, bring my talents to bear, and help them make this a bigger, better firm. So about a year ago, I joined as a managing director. And we've been off and running and really just growing our assets, talking to more great counterparties like Camaplan, and really just getting to, building the firm out, finding new investments, identifying new themes, but staying close to our process. And I mentioned Eric Munson. He is the co-founder of Adit Ventures. And, if I say I'm a Wall Street guy and Dan McCooey's a Wall Street guy, and we've evolved and learned and developed our prowess in venture capital, Eric is really the venture capital guy. Let me explain what I mean. Eric's from the East Coast, but at a young age, his father left a job at Mobil Oil to take a job as treasurer at a company called Fairchild Semiconductor. And Fairchild, if you haven't heard of it, is, well, it's obviously a chip company, but it's based out in the West Coast in Silicon Valley. Except, when Eric moved out there as a young man, Silicon Valley, as he likes to tell the story, it wasn't just Apple Computer and Steve Jobs. It was literally apple orchards. And Eric moved out to Silicon Valley as a young guy with his father, who took this job at Fairchild. And Fairchild was literally, after Hewlett Packard, the first venture company in Silicon Valley. And, just like, if you're a football fan, you always talk about the Bill Walsh coaching family tree, and all these assistants, coaches like Mike Holmgren and the like worked, worked as assistants for Bill Walsh and went out and won Super Bowls. Well, Fairchild Semiconductor was like the Bill Walsh. If you're, whether you're a Niners fan or not, I'm a Giants fan, so that's.
We can substitute Andy Reid. We're a Philadelphia company, so
Andy Reid, Bill Belichick, Bill Parcells,
of course.
The point is Fairchild Semiconductor ended up birthing companies like Intel from their personnel, like AMD, National Semi. It was an exciting place to be. And that was really the environment Eric grew up in Silicon Valley at a very exciting time. Menlo Park High School, UC Berkeley, and then he worked at a firm called Hambrecht and Quist that was a pioneer in bringing growth companies like Genentech and Apple to the public markets. He was there when they did the Apple IPO at Hambrecht and Quist. And then he worked in various private and public investing roles for firms like Morgan Stanley and Franklin Templeton, all along the way, investing in the private markets by himself. At some point, the Munsons and McCooeys got to know each other, and there was this great marriage of Silicon Valley and Wall Street that has evolved into, what's, as of 6 years ago, became a family office effort morphing into Adit Ventures and managing money, not just for friends and family, but also for individuals and institutions as well. So that's a little bit more about us.
Very, very impressive. So what I gained from that is there's no shortage of knowledge or experience in your virtual meeting room, which is always nice to know. So you sound very passionate about this business, about this industry. Can you tell me and the viewers a little bit more about what drives that passion?
Yeah, look, it's, I'm shot out of a cannon every morning. It's very exciting. I've done some very exciting things. I'm an optimistic guy in general. I like my rest like anyone else, but there's a lot of exciting things to do. Speaking with clients is a real pleasure, and I enjoy, explaining the opportunities in this asset class. And I'm also the guy that clients call if they want to know what's going on with geopolitics or macroeconomics. But, really, we have this great opportunity here at Adit where we're working directly with entrepreneurs and founders and other counterparties who are really literally creating this next wave of great companies, both here in the United States and abroad. And it's intellectually, it's really thrilling, and it's very stimulating for us. It's exciting, and running everything through this process. We trust our process. We love our process. We don't stray from that. And it's exciting to be able to say, okay, here's what we're doing. This morning, I was up at some pretty decently early hour, and I was on a webinar with venture capitalists that I know in Hong Kong and Singapore. And I had the opportunity to meet two new founders of education technology companies that we're now going to, run through the Adit ringer to assess them. Like I said, only 18 winners in 6 years, excuse me. So, it's, intellectually, it's very exciting, and it's very rewarding. We're really looking to generate, returns that are above and, have a better risk profile than what you can get in the public markets, just staying in the box of investing in public U.S. securities. So it is very exciting. And right now, 2020 has been a crazy year, but there's great opportunities. The risk reward coming out of this downturn we had, historically, it's been a great time to invest in private companies, according to research that we've analyzed from Cambridge Associates, which is a leading think tank and consultant in the investment community. And it's a very exciting time to be investing in these private companies and to be diversifying portfolios and just having the opportunity to work with people to do that. And see some really exciting things like technology that we see, companies that are changing the face of education technology, a company like SpaceX that's literally taking off this year and doing really well. It's very exciting, William.
It sounds it, definitely. Now tell me what makes investing in venture capital with Adit so different and so special from investing with anybody else, and why do investors want to do this with you?
Yeah, well, if you think about investing, maybe you've seen something called the efficient frontier, where it looks like this kind of curve where it says, okay, if you take this amount of risk, according to our model or according to history, you can generate this kind of return. And obviously, you want to maximize your return and minimize your risk in terms of what you do. Again, I mentioned Cambridge and Associates, and data that they've shown has shown that even versus investing just in public markets, or even investing in private equity, which is a similar but different animal from venture capital, you get a better return with less versus the risk, better risk adjusted return doing venture capital. And what I'll say is this: like anything else, you wouldn't just go out and throw all your money into one stock. You wouldn't just throw all your money into one bond. And we're not recommending that investors in a self-directed plan or otherwise throw all of their money into a private company or one private fund. But we do think that it is an essential part of diversifying into alternative assets, especially now with the opportunities that we have, and in the way the world is so wide open. Let me tell you something. We saw a big downturn in public markets in March and April. Many stocks have recovered. Some sectors like energy have not recovered. What we have found is that investing in venture capital and the companies that we have selected, they've actually really made some hay, even though the sun has not shone overall this year. It's been a very rough year. It's been a lot of volatility. I mentioned Airbnb earlier, and that's a company that, obviously they had their ups, they had their downs this year because, well, people weren't traveling anymore. People were canceling their bookings for vacations or work travel or extended stay travel. Well, the interesting thing is, number one, Airbnb did the right things. They had a strong balance sheet already, and they made it fortress-like by going out and raising money from great counterparties, companies like Silver Lake and Apollo, and really buttressing their balance sheet. And then they had to lay some people off, but they did it the right way. They did it compassionately. They paid people generously, and they really let their employees, their stakeholders know they cared about them. I said governance is important, culture is important, and Brian Chesky, who runs Airbnb, really showed that. I seriously think that this is going to be something that business and management students study, the way Brian Chesky and Airbnb managed the exits of these employees earlier this year. And then guess what happened? The sun came out a little bit, and Airbnb's prospects rose again. They were growing so well that even with travel still a little stunted coming out of this crisis, they're growing year over year. They're in better position than they've ever been in before. It's really amazing. And I credit our research process in finding companies like this, companies that are run right, companies that are done well. Look, there are funds out there that say, okay, we're going to take the dartboard approach. We're just going to buy everything. They're private market indexes, frankly. I know the folks who run these funds. They're good folks. They do a good job of what they do. The way we look at it is that's not process driven enough. That's like buying momentum. You might as well go out and buy things in your in your personal account and through your Camel Plan stock trading platform and buy stocks. That's not what we're doing here. We are adding to risk adjusted returns because we have this process. We're picking the right names. We're picking the right winners. And with those winners, William, it's funny. When we first started planning this seminar, I think the verbiage I used was, in our 6-year history, we've had 5 exits, meaning we've had 5 companies that we've invested in that have then gone public or done a deal in the private markets and gotten acquired. And those companies are GoPro, Spotify, Snap, Lyft, and then Lemonade most recently until today, Lemonade Insurance, which is a disruptive company offering consumers online insurance. And so that's great, 5 exits in 6 years. But as of today, that number is 6, because right now, while we're recording this, Palantir is listing on the New York Stock Exchange, and is going to start trading today. So we've had 6 exits in 6 years, and I mentioned Airbnb. That might be number 7. Shares Post is a private company that we're invested in, and that's having a private market deal that could be number 8. These are exciting times, and I feel like these exits are really showing that our process is finding the right opportunities for ourselves, for our investors, our potential investors. It's very exciting. I think we're
Wow.
making a difference.
Yeah, absolutely. I think every one of those companies you listed took some money from me in some way. I mean, willingly. So those are some big companies you name. You guys definitely have the culture. You have the passion. So I mean, with those things, I mean that should be enough. But other than that, what is it that makes Adit so special, so successful? Excuse me.
Yeah, I talked about how, management wise, we are this marriage of Wall Street and Silicon Valley. There's other members of our team I haven't mentioned yet. We recently hired John Cholak, and John has a great history working at Intel. He managed internal funds, venture funds for USAA, the big insurer that, some of you who have, very, very wonderfully served our country might know USAA well. Or family members who did, and thank you for your service. And John managed money for them, so he had a great track record there. So if you are, if you did ever have something to invest with them, you can thank John sometime. But now John is working with Adit, so we hope you'll thank him with Adit someday. But in any event, John has a very strong background in technology and in early stage venture capital investing. We have other great team members as well. Julie Klugman oversees our marketing and investor relations team. Max Moskovitz is our senior analyst, working on both our on the financial side and the research side for us, along with Shushin Liang. And then Monica Gonzalez is our colleague who really keeps us all moving. She is the engine that keeps. she is the point guard that keeps this team scoring baskets. Let me tell you. So, it's a great team, and, having a great team with diverse experiences and a great process, even though this has been a difficult year, like I said, markets have rebounded, but it's still been difficult. We've been growing our team, growing our assets, growing our product focus. And, even with all of us remote, here we are on Zoom. I'd love to be face to face with all of you right now, but here we are. We've been able to launch new products and grow our asset base, grow our investor base. We're bringing on great new partners, counterparties like Camaplan. We're just thrilled about that. And it's just a matter of, like I said, we're shot out of a cannon every morning and follow our process and find tomorrow's growth companies. It's very exciting. We love doing it.
Great. So Michael, risk is something that, keeps me up at night when I think about investing either my personal funds or even my retirement funds. And as I've been growing myself and at Camaplan and been learning how to invest, it's something that I think about a lot, and I'm sure it's something that our audience is very interested in. Now, how does Adit mitigate these risks?
Yeah. So we talked about the 10-step process and how it keeps us, we hope keeps us away from potholes like WeWork or Jewel. Casper was another one I could mention. We were offered that stock quite a bit, and well, we didn't see the competitive edge in paying over $1 billion to own a mattress company, so we didn't. They're great mattresses, but we didn't need to own that. But that brings us to another point, though. Like I said, Eric Munson worked for us, Franklin Templeton, and he always often quotes Sir John Templeton saying, "There's one thing that we can control in this whole process, and it is the price that we pay for investments." And we're very conscious about time and price. We're very conscious about valuation. It is a key part of that 10-step process that perhaps we haven't talked about enough. We can love a company's prospects, but that doesn't mean we're going to pay 100 times sales for it, as we've seen certain companies transact for in the public markets. There's a greater fool theory at work here, and that's not one of our process steps. Everything has its time and price and selectivity is really probably the best way to manage risk. But other than that, we also, in our fund, we do have concentration limits, no more than 10% in one name at cost, no more than 1/3 in any one theme/sector at cost. And you take those concentration limits, you add it to our 10-step process, and I think we have a very good recipe for risk. Mind you, these investments are illiquid. There is a 5-year life on the funds that's extendable for 2 years, 1 year at a time. But that's sort of the nature of the beast. And like I said, this is about enhancing a diversified portfolio. Again, we would not recommend that anyone takes their entire asset base and puts it into one asset class. We are not saying that. So that's part of it too.
Definitely, diversification is key. Now, you seem to be able to keep a lot of these risks at bay or mitigated pretty well, but there's always risk with any investment in order, especially if you want to reward. Now, what risks are present, if any at all, to an investor in your company? Well, I mean, there is always risks, as I said, but what risks are present to an investor in your company?
Okay. Well, look, investors in our fund, there is a 5-year life. And this isn't a liquid investment. This isn't like a stock mutual fund where you could say, okay, I'm going to press the sell and you'll get your NAV the next morning or however that works. That is the risk here. And look, like I said, we're very selective. We stand by our research process. We're very excited about everything we invest in. When circumstances change, we do our work and figure out where to go from there. But there is always the risk that one of our portfolio names could go, could end up going to zero. It could go bankrupt. We could have a company that does the wrong thing. We take strong steps to avoid that. But there is always that risk, and I would be remiss and possibly fraudulent if I said there was not that risk. So I will not say that. Our goal is that our selectivity should mitigate that, and so far, knocking on the wooden table here, that's worked.
Well, that doesn't sound too bad for me. There's always that risk as we know.
Public markets, Enron, everything, yeah.
Definitely. There's as much upside, as long as there's more upside than downside, it gets me going. And it sounds like you guys have a lot of upside. So personally, can anyone invest in your company from what I hear, or is there any opportunities in specific to invest in your company and make money?
Yeah, well, look, we're open to accredited investors, and our investor team led by Julie, who I mentioned earlier, is expert in shepherding potential investors through a platform like this, through the process of determining and then attaining accreditation. We do have a very large pool of limited partners, nearly 1,000 persons right now in our funds. And the opportunities are in our funds, and I keep talking about the fund, and the fund that I'm talking about right now is the Adit Growth Equity 3 Fund, which does focus on later stage venture capital companies like the ones we know, Airbnb and SpaceX and Klarna, which is now the largest private fintech in Europe. It's a Swedish company. It's been around for 15 years, and other companies like that. We are also, I mentioned John Cholak earlier, we're going to be launching the Adit Genesis Fund, which will be more focused on early stage opportunities. Again, Genesis will be focused on the same 10-step research process as the AGE3 fund and all our investments. And now the thing to know about us is we also offer opportunities either in special vehicles or in co-investment vehicles to invest in a single name. Now let's say, William, you came to us tomorrow and said, I'd like to invest X dollars into the Adit Growth Equity 3 Fund, but I also really like SpaceX. Well, what I can tell you is you can invest X dollars into the AGE3 fund, but we also give investors the opportunity to co-invest, to sort of supersize their investment in a name like a SpaceX or Airbnb, or some of our earlier stage names like Esg Learning Solutions, Decision Sciences, and you can supersize your investment in any single name and put up to X dollars into that co-investment vehicle. So X in the fund, X into SpaceX. And with that SpaceX investment, the normal fee structure goes away, where it becomes a one-time transaction fee, and then there's no management and carried interest beyond that. It's a great deal. So we have a lot of investors who do take advantage of that, and with exit number 6 happening right now, it's paying off well.
I whenever I invest, I like options. I like flexibility in my investments, and it sounds like you have that box checked. I'm partial to self-directed IRAs, obviously being a client executive here at Camaplan. So do you think this would be a good investment for a self-directed plan? Why or why not?
Yeah, I think that the Adit funds and the Adit vehicles, I think in general, venture capital is a great asset class if a self-directed plan investor wants to diversify and amplify their risk-adjusted returns. I think investing in private growth companies is especially a good way to do so. And the data has backed that up through history, and it's data we can share with any potential investor. Adit, given our process and our track record and our history and our outlook, I think it's a great way to do it. We'd love to be helpful to any investor in a self-directed plan. Absolutely.
Great. So, I mean, a lot of our viewers are either current account holders or have expressed interest in self-direction. So that's great to hear, especially as a self-directed account holder myself. Now, I'm sure from what you've told me and the passion that you have and the experience that your entire team has, there's a lot more that has been left out, or there has been a lot that has not been discussed in this webinar. So if myself or anybody wanted to reach out to you or Adit specifically, can you give us your contact information so people can reach out directly, or phone, email, website, something like that?
Sure. Well, you can visit our website at you can get it at www.aditventures, and that's one word. It's ADITVENTURES.com. I think aditventures.vc will get you there as well. The wonders of modern technology. And I'm happy to take anyone's email at block. That's BLOCK, Boy Larry Oscar Charlie King, at Adit, that's ADIT.vc. So block at adit.vc. And most likely, if it's general questions about venture capital and about Adit's investments, I'm happy to help. If you want to talk mechanics, I'm gonna tap my right arm and call in the expert Cy Young winners from the bullpen, namely Julie, who I mentioned earlier.
Oh, and as you were saying that, I noticed that it actually has been up for the entire presentation. Here's some contact information right there. Look there.
Yeah.
So it looks like we're actually winding down. We do have a hard stop coming up. Is there anything that you wanted to add to the viewers? Did you want to take any questions from the audience?
Yeah, I can take questions. What I can tell you is if you've ever, if you see the, lure in venture capital before this call, we are the opportunity for you to invest in it with us. If this is something that's new to you, glad to discuss it more and visit our website, and we can have one-on-one conversations. Happy to do that anytime as well. I learn something new every day, so it always thrills me to be able to, hopefully impart some help to anyone who wants it. So please.
Great.
And
So
questions.
Perfect. So if anybody in the audience wants to use the Q&A function, I should have probably mentioned this earlier, but I wanted to make sure we had enough time at the end. You can post your questions in the Q&A function through Zoom. And we'll make sure that Michael can ask any questions that he's prepared to answer. And if you have any questions about self-directed IRAs, I'm always more than willing to answer them. You already got my contact information just in case you don't think of it now. But we'll give you guys a few minutes to think of your questions if you have any, and then we'll go from there. But in the meantime, I'll start off with a question of my own, so we don't have this awkward silence that's painful for us both, and I'm sure the audience while they're trying to think of their questions. So we talked about self-directed investing and all the things you offer and why it's good to invest, or why it's the benefits of investing with a self-directed plan. Have you seen a specific uptick in self-directed investors since everything that has gone on? With the stock market and with COVID, have you seen an influx of self-directed investors?
Yeah, there's certainly been an upswing in interest in the asset class. So we have seen that. We've seen, again, we have this institutional client. We have this limited partner client base of nearly 1,000 people, and a lot of people. We do get a lot of incoming traffic. It's nice, and we're able to direct that traffic. But there, given that you have companies like Palantir, which, again, right now as we speak, is starting to trade in the New York Stock Exchange, that we've had these exciting companies like, in our case, Lyft last year. Everyone's taken a Lyft. Companies like Spotify. I listen to music all day, and I joke that I'm the world's second largest user of Spotify, right after the country. But that was an investment where our investors did well. People have seen this over time and have said, "Hey, how do I get involved here?" It's funny, with the I live in New Jersey, and with the restrictions opening up, it's funny. I'll go out to dinner, and I swear to you, I will hear folks at the next table, and it'll be like a nice family having dinner with, the kids are, say, in their late teens, early 20s, college age kids, and the kid brings up like, "Hey, my friend Bobby invested in SpaceX," and the mother will say, "Well, I didn't think you can invest in SpaceX," and my wife generally has to restrain me from jumping up and starting a conversation. But this is what's happening. There is this socialization of the asset class going on. Social media, TV, other media, it's all happening. And like I said, part of this is a function of the proliferation of the digital world. Part of this is the fact that companies are staying private longer. Companies like SpaceX, Palantir just went out, and it's a 17-year-old company. Airbnb is a 12-year-old company. There's a lot, going on there, and people are seeing that if they have the opportunity to invest in private assets, in these private companies, they're going to jump on it.
Definitely. And I can see we're actually having some questions come in from the audience, Michael. So actually, two people asked, is there any minimum minimum investment for self-directed investors or other just investors, or any dollar range of your investments?
Yeah, well, the stated minimum for our funds is $250,000. For co-investment vehicles, it can go, or for single name vehicles, it can go lower. We're happy to to discuss whether there's any room on that, but that's generally what we've gone out with.
Okay, that's a great answer. Now we have another question from an anonymous attendee who says, "What are the potential returns for the investors? Is there any dividend paid out during the 5-year period?"
Yeah, this is not an income product. This is a growth product, so there's no dividends paid out. The targeted returns for the Adit Growth Equity Fund are 3 to 5 times within 3 to 5 times return on invested capital within the 5-year life of the fund. And I see there is a question, are all investments a minimum of 5 years? If you invest in a fund, it has a 5-year life. Now, what I can tell you is, if someone invested in, say, what happens is when there are exits from the fund, you are paid out as time goes on. So it's not like a regular dividend, but I'll give you an example. Let's say at the beginning of this year, you would put $1 million into the Adit Growth Equity Fund. Okay, let's say that there was some percentage, let's say it was 10% of that money was put into a company, a name like Palantir, which is probably the largest investment in that fund, so that would make sense. Okay. So what happens is Palantir just listed today. 20% of the shares are distributed. 80% are locked up until early next year. I can get into mechanics of that, but I think we all have to make sure we have make it to dinner tonight before I get into that. Meaning it would take a while. But suffice to say, 20% comes out. 20% comes out. What happens is you get a distribution of those shares. Now let's do some math here. Earlier this year, Palantir was looking somewhere around was trading in a range of, say, $5 to $7. Well, the company just went public and just did its first trade at $10. If I look at the screen right now, it's trading in the public markets right now. Sorry, my computer restarted itself.
No worries.
No, but it's trading north of $10 right now. I believe it's trading at $11.29. Great. So think about it. You got into the market of, say, $6, and then less than a year later, it's worth $11.29. That's a nice return. It's not a 5-year play, but you start getting money back. You start paying back. We start returning money to shareholders in this manner at a very nice return. So yeah, there are liquidity events, and we do invest with these events in mind.
Understood. Thank you for the detailed answer, Michael. So it's not, you're not guaranteed the dividends, but there are cash payouts depending on certain situations.
Investors are paid on, upon exits, upon events. Yes, I would not characterize this as a dividend. Let's be very careful about that.
My apologies.
No worries. I just want to be crystal clear.
I completely understand.
Why you're here.
So it looks like you touched on everything our viewers were looking to find out, and we are reaching our cutoff point. So I want to thank you, Michael. I want to thank Adit for coming out and providing all of this information to me and to the viewers, and how crystal clear and how passionate you were about this entire thing. Is there anything you want to say before we say we bid this webinar goodbye?
No, I just want to welcome everyone to reach out and let us know how we can help you learn more about private markets and venture capital, and how we might work together.
Thanks again, Michael. And again, his contact information is on the screen. My contact information was mentioned earlier. Any self-directed IRA questions, I can help answer. But clearly, Michael is the expert on anything Adit, anything of what they do and what he presented. So feel free to reach out to them. And I want to thank everybody again for attending tonight's webinar, or today's webinar. Not yet tonight. So have a great night, and thanks again.
Thank you. Have a great day, everyone. Thank you.